Hey traders, Akil Stokes here with Tier 1 Trading, and welcome to another episode of the Trading Blog. If this is your first time joining me, I'm a Forex trader and trading coach over at tier1trading.com, and this is a daily video that my trading partner Jason Greystone and myself put out every day for our Tier 1 clients. And every once in a while, when we get the time, we try to upload a public version to YouTube as well. Fortunately, I woke up 6 o'clock this Saturday for no good reason. This is one of the few Saturdays where I have completely nothing to do. So, of course, I would ruin it by waking up at the crack of dawn. But, well, I felt like recording a video, so I guess it works out well for you guys. Now, in today's video, we're going to look at a few trading opportunities that are on my radar for the week ahead. There's a lot out there, but we're going to concentrate on three, and I want to break them up into kind of three different types. So we're going to look at one type of classic trend following trade that has longer targets, so a trade that you can get involved in and trail. We're going to talk about another trade that looks like a trend following trade, but I'll explain why you want to be a little bit more cautious with your targets. And we're also going to look at a trade that I took this past week. Actually, I took it, wow, it's been about 3 weeks ago. That worked out pretty well and give you a little bit of a lesson about trading psychology. And that also has a trading opportunity on it as well, but a little bit longer term. So we're going to start off here on the euro dollar. We're going to look at the daily chart, and we're actually going to kind of go backwards. Now, I go through a four-step process in my trading called IPDE, identify, predict, decide, execute, and I use multiple time frame analysis to go through that process. But I want to work backwards here in hopes of educating you why I'm not as interested in this trade as you may think. And just a little tip out there for you guys, this is going to be a writer downer. A problem that many traders make, especially new traders, is they're so excited about trading that whenever they look at a price chart, they look for any reason they can to take the trade. They see what they want to see. And the mind is a funny thing because we will create what we want to create. A good example I always do with my traders, especially new ones that come into the to work with me, is I say, give me any chart, any time frame. I bet I can convince you to buy it or sell it or do both. So a tip that I use is that I always look for reasons not to take the trade, right? It's a very cautious approach, but again, the number one rule of trading is don't go broke. So we'll see that in a little bit. But if we start down here on the 4-hour chart, you're going to see something pretty cool with the euro dollar, right? You're going to see that our most recent move looked something like this, right? We had a swing high to swing low coming off that bigger double top, the bigger 2618 here. Swing high to swing low. We had the market put in a retracement, and then we had a new structure low created. And you know, something my trading mentor always told me, and it's ingrained in my head, it's ingrained in many of your heads as well, is look left. I guess left would be this way for you guys. I don't know how the camera thing works, but look left. Structure leaves clues. And you can see that we've broken past our previous level of structure, right? So if you're familiar with how to read a trend, we know that we have new structure low, outside return, new structure low. We should expect a retracement. And then after that, we should expect a continuation. And this is setting up to be a very optimal situation for a few reasons. One, price action has already returned to our previous outside return. It's a little bit of a structure shelf right here. And you can see that it's starting to react a little bit. Now, it was the end of the day Friday, but we have a high momentum candle followed by a doji candle, which is an indecision candle, followed by a very high momentum / reversal candle. So something like a lower low, lower close at this area would offer a really, really good entry opportunity. And we can look at our risk reward here if we just drag our little tool out, and we can say, okay, well, stops need to be above previous structure highs, right? Targets can be, you know, an extension all the way lower to wherever you think it's going to go. Look left, structure leaves clues. And you're looking at this and you say, wow, 6-to-1 risk reward, Akil. This is amazing. However, let's look a little bit deeper. And the fact is, right, we don't have a confirmed trend. And if you go back to the daily chart, which is our higher time frame, so we would actually start on the daily when we do our analysis, we notice that we're in a very tricky situation here. Yes, we did. I'm going to delete some of my tools here, so pardon me. Yes, we did break previous structure looking left. right here, but we have another level of structure right here, which we didn't break. And this is actually where the market reacted. You can see price action spiked down to that level. The sellers tried to push it down. They found some buyers down there, and the buyers said, not so fast, my friend. And we followed it up with a big engulfing candle, right? Buying pressure, and another buying day after that. So that tells me that there's no reason I should anticipate price action to come down here. And if I want to be more realistic, right, not only do we not have any type of confirmed trend, so technically speaking, we have no reason to, or at least I have no reason to think that we're more likely to go lower than higher, right, which is not necessarily a position we want to put ourselves in. But if we are, a much more conservative level is going to be all the way back up here for retest of this inside level of structure, which you can see changes our risk reward a little bit. So going back down to the lower time frame, I still think it's a decent trading opportunity, right? To look for targets. This is going to be your first danger level right here at 122.80s, but obviously that's going to be a little too. No way you're going to be able to place targets there. But I think if you want to be involved in this type of trade, I would certainly look for initial targets at a retest of these structural lows, maybe right here at the 122.18 level, certainly above 122 even. And I would even, I guess you could do secondary targets. It's probably safer just to do a one in, one out approach, meaning you have one target area, treat this more like a counter trend trade where you're not looking for an extension, you're just looking to get in, get a couple pips and get out. So kind of a counter trend trader mentality to this trend continuation trade. So it's at a nice spot, don't get me wrong, a very nice spot. The issue I have is there room for continuation? And that is another problem that we see many of our newer traders make. They have no issue identifying trading opportunities. But we all know there are three parts of a trade, right? There are three things we need to know before we ever get involved in a trade. Entries, stops, and targets. Where and how am I going to enter? Where do my stops go? Where do my targets go? And target placement, stop placement is that's a whole nother story. But target placement is a big issue because many traders just aren't good at target taking. Let me ask you guys this question, and feel free to leave a comment underneath. Have you ever been involved in a trade or multiple trades where you nail the entry, it reverses, you do all the analysis, it reverses exactly where you thought it would, but then it doesn't quite come to your targets and then it turns around and stops you out? Right? Give me a yes if you've ever been that way. I think you'll be surprised at how many traders will be commenting under this video. But yeah, a lot of traders do that. They're like, I get messages all the time. Akil, I'm good at analyzing the market, partially. I can call where price is going to reverse at, where it's going to turn around at, but it just doesn't seem to hit my target. It always seems to get very, very close and then reverse. And that's just improper target taking, meaning that you're just missing one little thing. You're good at calling the areas, but you're not really good at your expectations of where you think price is going to go. And if you can change, right, that second part of the equation, that's probably the one thing that's going to get you out of that Mark Douglas boomer buster middle zone of trading and put you up into that upper echelon of the 10% or so of traders that end up being consistently profitable. So think about that. Now, on that subject, we might as well just go right into it. The dollar yen. This was an interesting trade. This was a trade that we had been tracking with our clients since mid-February. And by tracking, I mean, again, we do these videos on a regular basis. I personally like to look at longer-term trading ideas. So it gives you a chance to look at this video, really analyze the charts on your own. It gives you don't have to rush into a trading opportunity. It's not like, here's a trade right now. Go to your chart, take it. You have time to watch it, review it, go to your charts, go back, see how you think, see how I think, and kind of put it all together into a trading idea before it actually happens. So we started looking at this trade ever since the break and close of structure on the higher time frame, right around this level, around February 15th. And what we were looking for is we were looking for a classic pullback trade, right? So nothing fancy. We were just looking for price action to pull back into structure and then continue down, retesting previous structure lows. And if you're a swing trader, if you're operating on the lower time frame or the higher time frames, excuse me, these things take time. So it took about a week to get up here, right? Finally got an entry. I think it was on like a Friday. I think it was 2 Fridays ago. I think it was, I was either Thursday or Friday. Maybe it was a Thursday because I was out of town Friday. And we entered right here. And then this is one of those trades that took you through, it took you through all of the emotions you could have as a trader. So imagine this, right? For you guys that didn't take this, put yourself in this scenario. You're waiting on this trade for about a week, right? Your heart's pumping, you're doing on analysis. You're like, come on, get there. Give me the reason. It's hard enough not to make a mistake and enter early, right? It's hard enough to pull the trigger and actually enter the trade and not get scared and nervous and miss out on it. But then after all that, you get filled. And then the market does this, right? You rally down about 100 and something pips. I forgot where it went to. 107.60s, I think I was at. 107.60s down to about 106.40. So 120 pips down. You're sitting back and you're doing the money dance, right? You got your Monopoly money. You're letting it rain. You're counting profits, right? You're excited. This thing worked out exactly how I thought it would. But wait, there's more, right? After you do that, guess what happens? The market rallies back up, right? Powell came out and did some testimonies this past week, really giving a hawkish tone about the dollar, saying that we were kind of banked in 3 rate hikes this year, no matter what. With the fourth was kind of sitting there, but I think the market was kind of like, probably not. He came out. Powell is our new Fed chair. This was his first time testifying. And he came out and gave more of a hawkish tone, kind of hinting that, hey, 4 rate hikes could happen. And we saw some dollar strength. And what did that dollar strength do to your bearish dollar yen position? It moved the market against you. And you went from all of that partying, being up 120 pips, to guess what? To either break even or in the negative. Break even or in the negative. Now, for those who were patient, I always say patience pays, literally, right? With profit in your pocket. For those who were patient, they stuck with this trade. Price came from your entry to plus 120 to minus 20, back down to plus 100, and then back up to break even, right? It's whipping you around. This is what the market does. The market wants to give as many of its participants as much pain as possible. Again, the market's job is to bring as much pain as possible to as many of its participants as possible. This is how it whips you around and scares you out and makes you make mistakes and gets you out of the game. It rewards those who do it the right way, but for those who aren't psychologically strong or those who don't know what they're doing, right? It's like trying to surf in the ocean, right? That wave will whip you and get rid of you really, really, really quick. So we go from plus 120 to minus 20, plus 100 to break even, and then finally we rally down and hit targets for about 180 pips, something around there, a little bit short of that, and woke up on Friday to a lot of messages, because there were a lot of newer traders that shot me messages saying, hey, Keel, we just hit it. I'm so excited. We've been watching this thing for 3 weeks. I really feel great about myself. And for those traders, this is going to be a very valuable lesson, because it's not easy to do this. It's not easy to deal with that whipsaw, that up and down and up and down. But for those traders that did, psychologically it's going to benefit them massively down the road. However, as you can imagine, there were also another stack of emails that I got, right? As soon as I updated our clients and saying, hey, good job on that trade, telling me that, hey, Akil, unfortunately, I got stopped out. And that's for various reasons. We did a lesson each Monday. We have a private strategy lab. And this past Monday, we did about an hour and a half lesson with one of the main concepts being how to trail a stop loss, active trade management. I'm a really, really big fan of, once you settle in your trading system and once you get experience as a trader, your win percentage doesn't necessarily increase that much, right? If you're a 60% trader, you don't necessarily make this jump from 60 to 80%. Usually if you're trading within your system, you can get better at adding filters, you can get better at spotting better or worse situations, but maybe you go from 60 to 65, but you don't make these massive jumps. So the way to start becoming more profitable is, how do you manage that trade? Active trade management, meaning that you maximize your rewards, right? Maximum favorable excursion. You minimize your losses, maximum adverse excursion. Basically, making your, when you lose less. When you win more, right? You still win around the same percentage, but when you lose less money. When you win more money, and then your account grows because of that. So we did a lesson on a few ways to actively trail this. So one being a very conservative way, which takes time and leaves you exposed to more risk, but opens up more reward. Another one being an aggressive way, which locks in profit more quickly, right? More quickly. Which one is it? Let me know in the chat below. But also, because it locks in profit more quickly, you don't have as much breathing room on the upper end, so you can get stopped out earlier. And I got a handful of traders doing different experiences. One of them was like, hey, I trailed too soon. I knew I shouldn't have done that. Others are saying, hey, I trailed perfectly and I ended up not getting stopped out and making profits. And then there were a handful of traders that said, hey, man, I just gave up on it. I couldn't deal with it. Once I saw myself up 100, once I saw the market go from 120 plus 120 green to minus whatever red, as soon as we got to 100 for the second time, I just got out the trade. And now I feel bad. I felt good at the time, but now I feel bad about it. And again, that is a common mistake. Do me one more favor. Comment section below. Just give me a yes if you've ever done that. And I say that because traders read the comment sections of these videos, guys. And typically as a trader, we feel like we're on an island. We feel like I am the only stupid person making this dumb mistake. And that's not true. We're all making it, or we all have made it at one point. And just to know that you're not alone is a massive help, because you're not dumb. It's a normal thing that normal traders are doing. Now you want to fix that, obviously, but you don't want to lose confidence in yourself. You don't want to become depressed or anything like that, thinking that everyone else is great and you're not. Typically, because that's how the internet likes to tell you. Everyone on social media only tells you about the good. They never tell you the bad. So when you view these avatars of real life people out there, you think they're golden childs or nothing ever goes wrong in life. Yet in real life, things do go wrong. You just don't hear about it. That's a topic for another day. But anyway, there is an opportunity here on dollar yen as well after all of that ranting. Not as good as an opportunity as it could be, mainly because we refuse to... Hopping out to the daily real quick, we refuse to make a lower close on the week. So we don't have that new structure low, which doesn't allow us to make the prediction that we would want to make for trend continuation lower. But if you are looking for a trading opportunity, day traders, there's going to be a ton of opportunities in this little box right here. We'll talk about that when we get started in our live room next week. But for a longer term trader, I would wait for a retest of this level, right? You can see the market consolidated right in here. If we can get a retest up to this level right here, let's call it, 106.50s, really 106.40s, right all the way up to this level, that's another chance to get short, right? So the market is offering us many opportunities, right? We had an aggressive lower low, lower close right here. We had a double top right here. We had a 26.18 opportunity right there. So whether you're aggressive, conservative, or super conservative, there was a chance for everyone to get involved. Don't give up on this trade. There is still another opportunity if we retrace higher, a fourth chance at getting involved. So running long already, let's get one more done. I've got an Everton match to catch in about 7 minutes. I don't know if that's going to make me feel better or worse about myself with the form they've been in, but we'll see. I'm a supporter, so I'll support. Philadelphia Union played today too. It's been a good, maybe it'll be a good sports week. My Sixers are on a roll. MLS, right? American soccer kicks off today. Everton's playing a game that they should win, but will probably lose. I don't know. Taking my kid to a train museum. Fun stuff. All right, so let's look at pound dollar. This is a pair we talked about in my last Trading Edge video, where we talked about kind of the differences between two advanced pattern formations that are setting up. Obviously, if you're a tier 1 client, you know what I'm talking about. If you're on YouTube, just ignore that. It doesn't matter. But that is an opportunity there. There's a bigger opportunity on dollar yen as well. We'll visit that later in the week. But anyway, what we're looking for here is more of a classic trend continuation trade, similar to the original trade I talked about in the dollar yen, where you see that we did have a break and close below here of our previous structure low. It's just barely, but we technically did. So what I'm looking for is a pullback into structure and a chance to get short here. And if we go down to the 4-hour time frame, you're going to see a bull flag formation right here, where we have our flag pull, right? The impulse will move down, and then the market starts consolidating in this upward channel. looking left, structure leaves clues. Typically, this type of formation breaks out to the downside. And if we are going to break out to the downside, let's just say we project a one-to-one measured move. So traditionally, you want to project the length of the flagpole, which is this line right here. If we were just to copy this, clone it, and put it on to here, right, that would project the move down to the level that we were looking at earlier in the week, which is right down here. Boom, right at our previous level of consolidation. So pullback traders, you can certainly look for a pullback, a chance to get short, more like a classic trend continuation trade, because this one you do have the well, yeah, you can make the projection that we are going to continue lower here. So cool stuff right there. February was an amazing month. If I have time, I'll edit and show you the equity curve, but it's been a pretty good month. And by pretty good, I mean things are going how they should be. If you guys know me by now, I am not one of those. I'm probably the opposite, right? I am the anti-social media trader, meaning I'm the opposite of everything you hear. I'm not about fast cars and boats and telling you that I can make 1,000 pips a day every day and turn your $100 account into $1 million in a year. I try to present, right, what I believe is the reality of trading, and that trading is hard. It's very simple, but it's hard, and that it's not really a get-rich-quick scheme. It's more of a slowly build your account, and before you know it, you've turned a certain sum of money into a lot more money. Think like the tortoise and the hare, right? The tortoise is just slowly churning, but at the end of the day, he wins the race. So it's been a pretty decent year. I'm hitting at about 58%, which is right in my normal. I'm normally between 55 and 60. I know, boring, right? But it works for me. And as you can see, the equity curve is going in the right direction. It's churning from bottom left to top right, which is all I care about. And for you guys that have been with me for years, you'll see that I'm usually pretty consistent with that throughout the year. So although in the beginning of the year it doesn't look too sexy, when you just add that over next 10 months, it gets the job done. And that's all I want to do as a trader. I want to get the job done, and I want to provide for my family. If I can do that, I win. So hope you guys enjoyed this video. If so, do me a favor. It's a massive help to hit that like button. It's a massive help to share this over on social media. If you're on Instagram, go ahead and give me a follow on Instagram. I've been doing kind of a behind the scenes of my day type of thing. So you guys that are creepers and you want to see every single minute of my life, follow me on Instagram. And leave a comment, of course, leave a comment. Let me know what you think about this video. And if you are interested in making a change in your trading or taking your trading to the next level, I recommend checking out our website, www.tier1trading.com. This year we decided to do something a little bit different, a little bit crazy, and basically what we're doing is we're offering $10,000 plus worth of product and content for a very low monthly cost. Maybe not the smartest thing to do business-wise, but it's the most convenient way for us to operate. Instead of offering, 10 different types of products, such as live rooms and multiple training courses and Q&A sessions and accountability sessions and software, we just decided to do it buffet style, meaning we're going to put everything on the plate for you. You sign up for a low monthly membership fee, and you get access to everything. And again, you can watch, there's about a 10-minute video if you go over to our website right on the homepage, where you can check out all of the details of what's included in that membership. So I appreciate it as always, guys and gals. If you're on YouTube, I'll see you in a week or so, perhaps. If you're a Tier 1 member, I will see you Monday in the Q&A. Remember, we're going through the money management spreadsheet, so make sure you bring questions for that. And until next time, plan your trade, trade your plan. Wish you guys a great week of trading. Wish you guys a great month of trading as well.